The war in Ukraine was not just a military or political event. It became a turning point for the global economy, reshaping markets, supply chains, and the way the international financial system operates. What began as a regional conflict quickly turned into a global shock with long-lasting impacts. Before we dive into the analysis, make sure to like the video, subscribe to the channel, and comment below which country or city you're watching from. This helps the channel grow and also shows how far this content is reaching. Now, let's understand how this conflict changed the game. When Russia invaded Ukraine, markets reacted immediately. Stock markets fell, currencies fluctuated, and fear took over investors. Within hours, geopolitical risk, often overlooked, returned to the center of global economic decision-making. Ukraine holds a strategic position in global food trade. The country is one of the world's largest exporters of wheat, corn, and sunflower oil, essential inputs for dozens of economies. The disruption of this production created a supply shock that markets were not prepared to absorb. With ports blocked and agricultural areas turned into conflict zones, the global supply of grains dropped dramatically. Prices surged, especially affecting importing countries and more vulnerable populations. Food inflation spread quickly and persistently. At the same time, Russia exerts enormous influence over the global energy market. The country is one of the world's largest producers of oil and natural gas, serving as a key supplier to Europe. The war exposed this dependency in a brutal way. The disruption of Russian gas supplies pushed Europe into an unprecedented energy crisis. Prices soared, industries cut production, and households began to feel the impact directly on their energy bills. This placed additional pressure on economies that were already fragile. More expensive energy means more expensive production. Rising costs spread throughout the entire supply chain, affecting transportation, manufacturing, and services. This cascading effect pushed global inflation to levels not seen in decades. Faced with this scenario, central banks were forced to act. The era of low interest rates and monetary stimulus came to an abrupt end. Monetary authorities began prioritizing inflation control, even at the risk of economic slowdown. The Federal Reserve, the European Central Bank, and other central banks around the world launched aggressive interest rate hiking cycles. This completely transformed the financial market environment, reducing liquidity and increasing risk aversion. Companies that relied on cheap credit were hit hard. Sectors such as technology and startups, which had grown in a low interest rate environment, saw their valuations collapse. The market entered a new phase of selectivity and caution. In this context, investors sought assets considered safer. The US dollar strengthened, gold regained prominence, and government bonds began attracting more capital. Defensive behavior came to dominate the markets. The strengthening of the dollar had global effects. Currencies in emerging markets depreciated, making imports more expensive and increasing inflationary pressure. In addition, dollar-denominated debt became heavier and more difficult to manage. Another significant impact was the reconfiguration of global supply chains. The war exposed the risks of excessive dependence on a small number of countries for strategic inputs. Companies began to reassess their production and logistics strategies. The pursuit of maximum efficiency gave way to the pursuit of resilience. Producing closer to the final consumer, diversifying suppliers, and reducing geopolitical risks became priorities. This shift altered the logic of globalization. This new model, less dependent and more regionalized, tends to be more expensive. However, companies and governments began to accept this cost as a necessary price to ensure long-term stability and security. The defense sector was another major beneficiary. Countries increased their military budgets, boosting companies in the sector. The arms industry returned to a central role in developed economies. The war also accelerated investments in energy security. Renewable energy, previously seen mainly as an environmental transition, began to be treated as a strategic issue. Dependence on imported fossil fuels proved to be a geopolitical risk. European countries began investing heavily in solar, wind, and other alternative energy sources. In addition, there was a race to secure liquefied natural gas supply contracts with new partners. If this content has made sense so far, take a moment to subscribe to the channel now. This kind of in-depth analysis on the global economy, financial markets, and geopolitics is exactly what you'll find here. In the agricultural market, the war also changed behavior. Producing countries began restricting exports to protect their domestic markets. This further worsened global shortages and increased price volatility. Food insecurity became a central topic in international forums. Organizations warned about the risk of humanitarian crises in regions highly dependent on grain imports. These economic impacts began to generate political consequences. High inflation affected government approval ratings, triggered protests, and influenced elections. The economy once again became a decisive factor in the global political landscape. In financial markets, geopolitical risk began to be priced in more consistently. Investors stopped treating conflicts as temporary events and started incorporating them into long-term analyses. The economic sanctions imposed on Russia represented a historic milestone. The freezing of international reserves showed that the global financial system can be used as a political tool, raising concerns across many countries. As a result, some nations began searching for alternatives to the US dollar in international trade. Although the dollar remains dominant, the push for diversification gained momentum, especially among countries seeking to reduce vulnerabilities. The oil market went through a period of extreme instability. Supply shocks, OPEC decisions, and political tensions began impacting prices almost immediately, increasing unpredictability. This volatility reinforced the importance of geopolitics for investors. Analyzing numbers and charts is no longer enough. Understanding the global context and the strategic interests behind decisions has become essential. Economies that seemed distant from the conflict also felt the effects. Latin America, Africa, and Asia faced imported inflation, currency volatility, and slowing economic growth. The war also impacted the global industrial sector. Shortages of key inputs, combined with high energy costs, reduced production across many countries, weighing on economic growth. International trade began operating in a more fragmented environment. Economic blocs strengthened, strategic agreements gained importance, and multilateralism lost ground. For investors, the main lesson was clear: diversification is essential. Unexpected events can completely change the landscape, and exposure to different regions and asset classes helps reduce risk. The war in Ukraine showed that the world has entered a new era. A period of greater instability, intensified competition between major powers, and less economic predictability. In this new environment, investment decisions require deeper analysis, better information, and a long-term perspective. Simple strategies are no longer sufficient. If you've made it this far, make sure to like the video and comment on what caught your attention most about the war's impact on global markets. This helps the channel a lot and strengthens our community. In the end, the war didn't just change prices and charts. It reshaped priorities, strategies, and the way the world views risk, security, and economic growth. Understanding these shifts is essential for anyone who wants to make more informed decisions, whether as an investor, professional, or citizen in an increasingly interconnected world. And to wrap things up, if you want to keep understanding how major global events affect your money, your investments, and the global economy, subscribe to the channel now, turn on notifications, and share this video. Here, you won't find just news, but analyses that connect the dots and explain what's really happening. I'll see you in the next video.